Hey, how's it going, everyone? My name is Amos, and I'm the guy that bought a crap ton of UnitedHealth Group shares earlier this year when they went on a sell-off of the century. Do you remember when UnitedHealth just fell off a cliff? Now, mind you, I have receipts all over my YouTube channel on why I thought it was a good buying opportunity. And I still think it's a very high quality company. But in this video, number one, we're gonna go over why UnitedHealth Group's stock is soaring to the sky right now. And number two, we're gonna be talking about my position in shares of UnitedHealth and how they're performing so far. And then at the end of the video, number three, I'll be giving you an updated price forecast for UnitedHealth Group. So if that sounds good with you, let's go ahead and get into it. So as you can see on your screen right now, UnitedHealth Group in the past one day, they're up by 8.5%, or in other words, they went up by $27.48. If we just zoom back and do the past 5 days, they're up by 12.9%. If we do the past 1 month, then they're up by 37.8%. But holistically, if we take a look at their year-to-date performance, they're down by 31%. Now, I started to buy into UnitedHealth Group somewhere around this point right here as they started to go on a dip. And I remember when I uploaded my first video about UnitedHealth saying, hey, guys, I started a position into UnitedHealth. I hope things work out, and here's why I think so. There were a dozen or so comments from random people saying, dude, I hope you lose all of your money. I hate UnitedHealth. But if we zoom back in and talk about what the heck is going on, why are they rallying? For crying out loud, 37% past 1 month. I think what started the momentum of them rallying is number one, we found out that Berkshire Hathaway, Warren Buffett bought into UnitedHealth Group. He's one of us. And then number two, as you can see on your screen right now, UnitedHealth sees 78% of members in high-rated Medicare plans. So UnitedHealth did not just rally today based on hype or speculation. Today's rally is about UnitedHealth proving that they're best in class among their peers. And the significance of this is that 78% of their Medicare Advantage members are going to be in plans that are 4 stars or higher. And that means every single nipple on Wall Street is jacked to the tits. It's rock hard because if you enroll into a 4-star plan or higher, that unlocks more federal money, more bonus money from the government saying, hey, we're reimbursing you and we're giving you more money. And if you don't understand Medicare, it's basically the health insurance that we give to our vulnerable population of elderly. So people that are aged 65 and above, as you can see right there. Americans aged 65 or older. And then this article wraps it up by saying that UnitedHealth back in July reaffirmed their full year earnings per share. The earnings per share is basically the profits per share, otherwise known as the bottom line per share of $16. And that's why, friends and family, you're starting to see the sentiment surrounding UnitedHealth flip from being bearish to that of bullish. It's no longer a question of stability or if they're going to go bankrupt or if they're going to go belly up, but rather it's a confirmation of strength, that they're best in class, that they're crushing it. Okay, year to date, probably not the best stock price chart pattern to show you, but 1 month. Okay, there you go. So now I'm going to show you my position. To be fully transparent with you, I have about 1/3 of my Roth IRA's capital allocated towards UnitedHealth Group. Now, I'm going to tell you right now, no, it was not a pleasant feeling when they dipped further and further into the red because I have 37 shares of UnitedHealth at an average cost basis of $271 a share. I'm telling you right now, when they dipped to $260, do you think I was smiling? Absolutely not. When they dipped down to $250, dude, I was questioning myself, like, do I even know what I'm doing anymore? But I'm pretty stoked and I'm fired up because if you look at the bottom of the screen, the total profit so far for my UnitedHealth position, I'm up by 28.3% or $2,844. Dude, that just puts oh my goodness gracious, friends and family. I'm in a good mood today. I'll tell you that right now. And the best part about it all is that UnitedHealth is a dividend compounder with cheese. Meaning, not only are they going to compound my initial investment into them, but they also pay a pretty juicy dividend. As you can see, my dividend yield on cost, because their share price went up, is 3.2%. Right now, if you were to buy into UnitedHealth at about $350 a share, then your dividend yield would be 2.5%. But if you bought the dip and your average cost basis of UnitedHealth is lower, then your dividend yield should be around 3.2, 3.4%. And this is worth calling out because their dividend growth CAGR for the past 5 years on average, they grow their dividend at a rate of 12.5% year over year. Dude, that's a crazy dividend growth rate. And in September 23rd, I'm going to get my first set of dividend payments from owning UnitedHealth, from my troubles of watching the dip, from my troubles of people telling me I should lose all my money for investing to UnitedHealth. Like, dude, don't do that, please. Like, that's the weirdest thing to me, that people who don't even know you wish ill to you. They're like, dude, I wish nothing but the worst for you without even knowing who you are. But anyways, for my troubles and holding on to them, I'm gonna get $81.77 in dividends in about a matter of weeks. Pretty stoked. And what makes all of this even more wild is that I did not expect UnitedHealth to recover so soon. I thought that it would at least take them a year, at a minimum, maybe 12 months, for them to reach about $300 a share. But man, I was off. It only took a matter of months, and now they're $348 a share. I mean, obviously, if you're investing into UnitedHealth and your average cost basis is like $615 a share, if you bought into it in November 2024, yeah, it's a rough patch. But if you did buy the dip sometime in May, sometime in June, sometime in July, or even in August, like right here, I think you're a pretty happy camper. You're sitting out there, you're grilling some hot dogs, and you're fishing for some bass, your kids are running around, your wife is happy. Dude, it's good vibes right now. But all that to say, when it comes to investing, it's not always gonna be smooth sailing where your investment into anything is always gonna go up and up and up. Sometimes, investing is gonna be a very bumpy ride. Case in point, when I bought the dip, immediately after buying into them, they just kept going further and further into the red. I mean, at one point, they were $234 a share. And I know for a fact that there are people who jumped ship. They were like, dude, I just can't watch it go lower anymore. They jumped. For me, I just swiped out of my brokerage app. I just turned the blind eye to it, and I said, you know what? My investing thesis is 3 to 5 years. They should be $600 a share. Let's just take a chill pill. This is just temporary. This is going to be a rocky ride. And then in a matter of a month and a half, dude, 28% share price appreciation for my average cost basis. But all that to say, when you buy into a very high quality stock that has gone on a sell-off, there is inevitably going to be periods where you might be in the red or just be flat for weeks or even quarters on end. I mean, if we just zoom out and take a look at UnitedHealth, their total return for their share price appreciation is 117,000%. So when I saw this drop off, I saw it as an opportunity. And you might be like, why? And I'll share with you here in a little bit. But continuing on my point about sometimes it's going to be a rocky ride, another dividend compounder with cheese that I bought into this year after selling out of them at about $200 a share is Google. I bought into them, I dollar cost averaged any time that they were 189 or below. And look what happened. They dropped further and further, and I just kept buying more shares almost every single week. I think my lowest cost basis of a share that I own for them is like $141. But I kept dollar cost averaging, and look at what happened eventually. When you buy into a very high quality business operation with an economic moat and a competitive advantage that is as wide as your wife's waist, dude, with enough time, if they keep crushing it, their share price is going to reflect their operations, and they're going to go whoop, whoop, whoop. They're going to go up and up. But it doesn't mean it's going to happen overnight or even next week. It takes patience. Because I was in the red with Google for pretty much like 3 to 4 months of this year after I bought into them. But with enough time, in the past 1 month, we're talking about 18.9%, past 5 days, 13%, past 1 day, 2.3%. Now it's nothing but green because the sentiment has changed surrounding Google. Likewise, the same thing with UnitedHealth. So tracking back and circling back to what I just said, why did I buy into them? when they went on this massive sell-off, and where most people would see it as a really scary, fearful thing. Because, friends and family, when it comes to investing, you have to take your feelings and emotions out of investing. If you keep your feelings in it, you will lose time and time again. I will say this though, sometimes you do gotta trust your gut feeling. If you can't put a finger on it, but something in you, like your left nipple, is telling your mind, dude, stay away from this, sometimes you should trust your gut feeling. But if it's your emotions, if it's your feelings, such as, I don't like the receding hairline on the CEO that's steering the ship for this company, or something stupid like that, dude, you're gonna lose. Now, the reason why I'm calling them high quality is, if you look at the data and the numbers, objectively, what does this company look like on paper? Are they good looking or are they ugly? The numbers and the math and the data do not lie. It paints a compelling story. So if you jump on over to their income statement, this is what I was looking at when I decided to buy into UnitedHealth, and I put a third of my Roth IRA capital allocation towards them. I put my money where my mouth is. If you look at their top line, which is also referred to as the revenue, year over year, it is consistently growing up and to the right without fail. Even despite all of the scandals and setbacks, in the trailing 12 months or past 1 year, it's almost 10% up in the green. You scroll on down, you look at the efficiency of their operations, look at their bottom line, their profits per share. We're talking about $23.12 per share in the past 1 year. Now, mind you, the leadership team said, hey, $16 at a minimum is what we're promising for this year. So far, it's adding up to $23.12. And it gets even better. Every single metric, the balance sheet, the cash flow statement, it's hard to find a blemish, a pimple, or even a wrinkle on UnitedHealth Group's financials. Yes, depending on how you feel about the American healthcare system, but that's not an objective number. And to be honest with you, that's a conversation worth having, because I personally think we need reform in the US about how we conduct our health services. But anyways, if we take a look at their free cash flow, the past 1 year, we're talking about $25.2 billion. Are you freaking kidding me? And when we break that down to a share level, $27.42 of free cash flow per share outstanding in the stock market. Dude, absolutely wild. And it doesn't stop there. Their dividend profile, dude, an absolutely sustainable dividend, because the payout ratio is 37%. Amos, what does that mean? That means from their profits per share, their earnings per share, their bottom line, they allocate 37% of it towards this number right here, the dividends. Meaning the company has well over 62% of their profits left over to do with whatever as they see fit. Reinvest back into the business, to buy shares, to improve their operations, to increase their workers' compensation, etc. and etc. And the growth rate is 8.2%. And did they cut their dividend? No, they don't cut their dividend, friends and family. You take a look at this visually depicted through the pandemic, they raised their dividend again and again and again, despite the scandals, despite the setbacks. So what I'm saying is, when I take a look at a dividend compounder with cheese on paper, if it looks good, and it has an economic moat, and the operations are executing, then to me, it's worth buying. I don't care what the headlines say, like, oh, this company is doomed, this company sucks. People said the exact same thing with Google. And I had such high conviction and belief into them that I also put thousands of dollars into Google, despite people screaming that they were cooked, despite people saying that the regulatory governments and the probing was going to result in them breaking their business apart, and that their search line of business is going to be cooked because of AI, whereas the facts and the numbers said otherwise. But I think you get the point. I think there's no need to keep wiping when there's no more brown streaks. So let's move on. Let's talk about my updated price target and forecast for UnitedHealth. So as of this year, they're projecting to close it out at $16 of EPS, which is what? Profits per share. Now, as it stands, if we jump on back over to UnitedHealth, their current PE is a 15. However, their forward PE is a 21. And for me, when I make a guesstimation about a company's future price based on their EPS, I like to use a forward guidance. rather than referring to their trailing numbers, if that makes sense. So if they finish out the year with a PE ratio of a 20 and posting $16 of profits per share, then I think they'll finish the year at 320. But I no longer think that's going to be the case. I mean, right now they're 350. And we still have 3 more months to go. And I feel like their next earnings report is also going to be positive. So I'm thinking that UnitedHealth is going to have a PE of a 25. And even if they still post that very bearish $16, he said that's the minimum. Meaning it could well be 18 or even 19 or even $21 of profits per share. But it's always better to be conservative and to be safe than to post very aggressive and optimistic numbers. So if we play along with the leadership team's guidance of $16 and a 25 PE, then I think they're going to finish the year at $400. But if we zoom on over to the next year and their EPS is $17.76, which is an increase of 11%, then, in a bearish, realistic case, I think they'll finish 2026 at 364. However, I personally think they're going to be around 450 a share. Now, why am I using a very bullish PE of a 25? Because for the past 5 years, their PE on average is a 25.3. And if you take a look at their price to earnings for the past 20 years, then it's a 21.3. So I think the left column is realistic and in line with their 20-year average. But if they do skew towards that 25, 26, or 27 number like they have in the past 5 years, then I don't think the bullish price forecast is out of the equation. So if we jump on over all the way over to 2028, even though UnitedHealth is $350 a share right now, I think at a minimum, they should be around $500 a share by the end of 2028. Or at least 512. And if all of these scandals and setbacks are in their rearview mirror and it's behind them, they should be back up to $605 a share. Now, I could absolutely be wrong, but those are my updated price targets on UnitedHealth, and I think the sentiment has changed for the better. Because in my previous videos, the projected PEs were really low. I think they were in the teen digit numbers, like a 12, 13, or 14. But now I am cautiously saying that I think we're back, baby. We're back. So when it comes to UnitedHealth, what is my game plan? Well, friends and family, I'm a straight shooter and I'll just give it to you up front. I do not plan on selling out of my position in UnitedHealth anytime soon. Because my whole reasoning and logic is, why the heck would I capitalize on a 28% gain and sell them at $350 a share when I truly believe that they can be $600 a share eventually? It's a $600 a share business. If I were to sell them at $350, to be honest, I'm shortchanging myself, like shaving my body hair with a rusty razor. Like, you could get an infection that way, right? It's a terrible situation. Likewise, if you sell too soon out of a position that has the potential to compound, I feel like I'm shooting myself in the foot. So I'm not gonna sell. I'm gonna choose to be patient. I'm in this for the long term. As I said in the previous uploads about UnitedHealth, I'm not buying into them to day trade or to make a quick buck or to sell out of them after 1 month. No, I want to hold on to them and let them compound, especially considering my yield on cost, my dividends. I love where it's at. And especially with the growth rate, dare I even say a buy and hold for a really long-term type of investment. I mean, they're high quality on paper, and at the end of the day, I still like the stock. I like their fundamentals and their metrics, so why would I sell out of them? But more importantly, what about you? What are you going to do with UnitedHealth? They have rebounded, they have recovered, and I think by the end of the year, I do not think $400 a share is out of the question. So what are you gonna do? Do you still like UnitedHealth? Are you gonna sell out of them? Do you still hate them? Let me know. Anyways, I love you guys. And I mean it when I say that, because by you watching this video, commenting and engaging, it allows me to do what I love to do, which is to create YouTube videos, but also to share my passion of the stock market with all of you. I cannot believe I have a platform where there's people that watch the videos and are a part of this Dividend Compounders with Cheese community. It almost brings a tear to my left eye. So I mean it. I love you guys. Stay safe. Good luck in the stock market. And I'll talk to you very soon. Peace.